Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at the most recent price action and what I think is likely to happen next. Now as I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, what you waiting for? Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's waste no more time. Let's jump right down into the video, starting things off with the 1 hour time frame. So we did see a little bit of a break to the downside here. It's just a little one. Basically, we're still finding that resistance on that 50 EMA. So you can see that we coiled up really strongly here. We had this little move of about 2.89, and then we've recovered. Okay, so a little bit of a liquidity grab before rallying on up. Okay, we are not in a strong position on BTC. If we take our trend line here from our original low to this wick low over here, and we pull this trend line across, you can see it was basically previous support has become resistance. We can also see that we're just resting on that 50 EMA at the moment as well. Ultimately, it looks like we are just above the EMA here, but we are overbought on the 8 hour, 4 hour, 1 hour. Chances are we are going to see a move to the downside. Now, when we start reflecting on everything that's going on here, I kind of do think that we have completed our wave 4 at this point with the move here. So we moved down, we moved up rapidly to the high, which is coming in at the 26,986. And all this move here realistically is basically just our corrections coming down. Now it does look to me more like we are going to be getting a diagonal pattern for our fifth wave movement, but we'll see whether that is something that's going to materialize. We were looking at this as a wave 4 being a triangle, sorry. And whereas that is possible, it would require us to have started our fifth wave move down already. And I'm not so sure if that would be the case if it were a triangle. So we'll probably look at this being the wick high on the wave 4 and then maybe diagonal coming on down. Either way, it's kind of quite clear and set that we have our high at 26,986. We should not breach higher than that. And our target range hasn't changed, a little bit deeper at 23,287 to 24,113. Okay, so nothing has changed from that kind of point of view. We've been really boring kind of sideways ranging market here, but essentially that's kind of where this is heading. We are looking to move on down to complete the fifth wave movement. The only way to prevent that is to cross the wave 1, which is up here at 29,109. So unless you can rally up higher than that, then essentially we have to move on down. Okay, let's go ahead and take this up into our daily chart. From our daily chart, you can see it's a big 5-wave drop. We're still waiting to complete wave 3, which will happen when we get that fifth wave movement to the downside. So you can see 1, 2, 3, 4, and then we've got to have that fifth wave down. Once we have that fifth wave down, we'll rally up into a wave 4. Okay, will be more sizable move. And then, of course, the final fifth wave drop here on our daily time frame, targeting out 22,659 to 23,426. And of course, that's a 5-wave drop. And if you have 5 waves to begin with, you must end in 5 waves. So if I go ahead and draw this on here, we have a 5-wave drop like this. Okay, where would be a 3-wave move to counter that, to go back up, and then a final 5-wave move to the downside. That's the minimum expectation. This is called a zigzag pattern, or ABC. Okay, that's an Elliott wave zigzag. And of course, that's our minimum expectation because it can turn into something a little bit more sinister than that, because you can get impulsive patterns which start with 5 waves like this. They have a 3-wave bounce to the upside, so everything looks exactly the same. Then instead of a zigzag where you have a 5-wave pattern that mirrors the first 5-wave, you get this really deep, impulsive 5-wave pattern like so. Okay, then you'd have another 3-wave bounce and another 5-wave drop after that. Okay, and it would look like this here. Okay, now That, as we would say, is actually a 5-wave pattern in itself. It's a 1, 2, 3, 4, 5, and it's a 5, 3, 5, 3, 5 pattern overall. It's an impulsive 5-wave drop, or in that particular case, it goes in both directions though. So when we take a look at this 5-wave move here, we know that we'd have a 3-wave bounce and another 5-wave drops is the minimum expectation, taking us down even deeper. So although this will have a significant surge, probably back up towards $28,000-$29,000, this area of resistance, in my opinion, chances are that we're just going to drop all the way back down again and go even lower than the local low over here. So for the most part, that is kind of, an interesting point to kind of keep an eye on. Now, if I throw on our smart money concepts, you can see these areas of previous resistance and support, blue being the support levels, red being the kind of areas of premium and resistance. We are in still a bullish structure that hasn't changed on the daily time frame. However, I do suspect that if we come down one more time into the 5th wave move, we're actually going to get a change of character into a bearish state of play rather than this bullish state of play. Obviously, you got to bear in mind things are a little bit laggy on the daily time frame for those kind of things, but for the most part, our structures are quite clear. We have further downside to be had here. The momentum indicator is also indicating to us that we have further downside as well. So take this up into the weekly time frame. At the moment, we're resting on that 200 EMA. You can see again today, we've whipped down a little bit lower than our 200 EMA on the weekly time frame. Chances are we have to come down deeper, right? We aren't where we need to be. We're oversold, yes, but we can be down here for a very long time. So this doesn't have to be a straight up reversal. The stochastic RSI does not tell us price direction or depth of price. It just shows that momentum is shifting around a little bit. But we can take weeks down here at the bottom before we can actually get another momentum shift. So for the most part, I think that everything on Bitcoin here is not looking overly great. We can see patterns and data that are indicating that we have to see further downside on BTC, and so our expectations are that we complete those 5-wave patterns. We lose 26, we lose 25, probably heading down to 23, 24K on the hourly chart. That would then allow us to complete off the daily before bouncing back up possibly to the 26, 27, maybe even rallying as high as the 28, 29. Before dropping back down towards 20K CME gap. So yeah, it's going to be one of those. We'll keep a close eye on it. Let's take this up into the world of data. So membership.𝗕𝗘𝗪crypto.io is our membership website. On this membership website, there's many different things and benefits that you can take advantage of as a member. Now, there's a 7-day free trial across all the plans. And just bear in mind that if you do not want to continue after the 7 days, you have to go to your profile area and cancel your plan. If you do not cancel, you will be charged. Now, as we kind of look at the various different things in here, we have everything from AMAs twice weekly, exclusive videos, exclusive technical analysis. We have what the team are buying and selling. We've got whale alerts, exchange listing alerts, coin alerts, accumulation zones where I think things should be purchased based on my technical analysis for many different projects. I think we've got 26 different projects that we've got kind of buy zone alerts for, all the way through to traders chat rooms, members charting areas in our Discord server, technical analysis on request, and so much more, right? And one of the things that we're going to talk about today is the data, the on-chain data that is available for our members as well. And this isn't just regular on-chain data. This is data that's been analyzed by myself, created by myself, and then delivered for members to take a look at. We're going to be taking a look at the Bitcoin data. So I'm going to jump on over there. We have our overview. Okay, the overview shows us the all-time high, the number of days since its all-time high, the percentage that we're down, the inflation rate being 1.93%, the amount of Bitcoin that was issued in the last 24 hours, all the way through to the fees that were paid for the number of transactions and so forth. Right, so it's a good overview. 1 million active accounts in the last 24 hours. There's 48.7 million accounts out there, so we can see that actually there's not that much activity in comparison to the total number of accounts versus the actual active accounts, for example. 551,000 transactions in the last 24 hours as well. 19,465,256 BTC in existence in the circulating supply. Okay, and it's important that we note that that's a pretty sizable number. The issuance of new Bitcoin is not as significant as the actual circulating supply. So yeah, it's an interesting one, but we want to really focus in on the wallet counts today. We're going to take a look and see what's going on there. We have 10 different sized wallets for BTC here. Everything from the low side down here at 0.001 Bitcoin per wallet. This shows us what has had a growth in it, right? There's basically 23.5 million wallets that have basically Bitcoin dust in them. As we kind of scale this up, there's 12.2 million wallets that have 0.01 Bitcoin in them. And there are 4.4 million wallets that have 0.1 Bitcoin in them. Okay. And then we have 1 Bitcoin has a million wallets. So there's a million wallets that have over 1 Bitcoin. 156,000 that have over 10 Bitcoin, and you can start to see how this whittles down. 15,000 over 100 Bitcoin or more. 1,000 Bitcoin is at 2,010 wallets. 10,000 is at 108 wallets, and there are 4 wallets with 100,000 BTC. No wallets that have a million, so flat 0. And so, what does this tell us? So it shows us that actually there's a lot of Bitcoin being held at the lower levels, right? So if I come back to my overview here, there's 19,465,000 Bitcoin, right, in circulating supply. And our wallet data is suggesting that the majority of that Bitcoin, or say not the majority, but large chunks of that Bitcoin are sat with what I would dub retail investors. And they unfortunately react emotionally to price action, right? 10 Bitcoin or more, you could argue it actually has 1.5 million Bitcoin in there minimum, right? So 1.5 million Bitcoin sits with 10 Bitcoin or more holders, retail investors, right? And so that's going to be a potential shock to the system if a lot of those retail investors start to panic sell. Same with here, right? There's a million Bitcoin sat with these retail investors that own at least 1 Bitcoin, right? And so a million Bitcoin there, even if this just goes down 30%, that's an extra 300,000 Bitcoin entering into the system if those 300,000 people were to panic sell their BTC, right? And as we kind of scale this down again, we can see here as well that there's about another 400,000 Bitcoin in the 0.1 Bitcoin holders, are even more emotional, right? So there's a huge amount of Bitcoin just stacked inside those 3 sized wallets, right? And I think it's important that we reflect on actually the idea here being that maybe these Bitcoin holders are probably approximately about 2 million Bitcoin just in the retail investors bucket here, that if they were to start selling, even if it was like a 30% drop in the wallet counts on those particular size wallets, is going to be a significant amount of supply entering the ecosystem that's going to drag the price of Bitcoin down. It's going to be quite an alarming thing. Now, from the kind of whale side, we can see that they are still aggressively coming out. They actually had a bear market low wallet count of, find it here, 2007 wallets. We are currently at 2010 wallets. You can see that they're still coming out. They're not backing BTC, haven't been backing BTC for about over 365 days. You can see here that they aggressively were selling just as it peaked up towards 65,000, I think it was, or 60,000. Around here, actually, and then they're selling into that peak, bringing price down. They're selling into the actual bear market high. They pumped up a little bit when Bitcoin hit 32K. They pumped it up. It went up to 48K, and then they just start selling, right? So you can see that they are aggressively coming out of their positions. They're not backing BTC in that kind of same way that retail investors are. You can see here they've just been steadily coming on out. And as price has been moving up here, they've been basically using it as exit liquidity. Now, you can see this across the board. Even the traders are very, very flat over this period. Okay, they're not overly they're not accumulating for the long term, right? 100 Bitcoin or more are basically what I would call professional level traders. They come in and out frequently and they follow the price action. And for the most part, you can see that they're flat. They're all actually negative numbers, but the wallet counts are reasonably flat over all of this entire bear market. And it's because they're just grabbing liquidity and extracting liquidity from the market. 10,000 BTC or more, they actually accumulate over the bear market and have started to aggressively sell again. This is pretty common on this sized wallet. Now, the reason for this is you can kind of see that in 2018's bear market here, they were accumulating and then they flood the system with excess Bitcoin, bringing in the bottom. Now, that's not to say that that's going to happen again. There's many different reasons why these wallets might sell, right? Over exposure and so many different reasons, right? I don't know the exact reason and the rationale behind why they did that in 2018, but what we do know is the very logical explanation is that the result of them doing that and the wallet counts depleting the way that they did and so rapidly brought in a bear market low point. We see them accumulating as price goes down, and then we saw them basically flood the market with excess Bitcoin. Now, we can speculate that they'll do the same again, and for the most part, they've kind of mirrored this already. They have been accumulating during the bear market, and as the turn of the year occurred here, you can see that they start to come out. They're using this move to the upside to their advantage, and they've been aggressively coming out recently. In the last 3 months, they are down 6.09%, right? So there might be a little bit of fluctuating happening in the last 7 days and the last 30 days, but over 180 days, down 5.26, over a 90-day period, down 6.09. So for the most part, we can see, and we can kind of look at this as a very logical explanation. These wallets are decreasing, right? And they're decreasing, and you can speculate on the why, because no one really truly knows the why, unless, of course, you're the holders of these or have some kind of intel on the inside. But from a logical standpoint, what do we know? Well, price action here has gone up, and these wallets have gone down. Chances are this is a liquidity exiting, or basically exiting using liquidity from this most recent move to the upside. Bearing in mind, a lot of accumulation happened when price was down here at $19,000. So, as I say, the people with this kind of wealthy level, they don't need new all-time highs to make significant amounts of money. They just need a significant surge in price, which they saw, right? They can 2x their money very, very comfortably, or 1.5x their money here, and basically extract pretty sizable amounts of profit from the market. So when we kind of review these things, this isn't a lot of data here to kind of say we're bullish. There's actually very little data to suggest that we're bullish if you're following the money. The Bitcoin itself has been accumulated by retail investors, and retail investors, historically speaking, are not the best when it comes to trading, and usually are on the wrong side of the trade. Okay, now there's many reasons why retail investors might sell. There's housing crisis, for example. Many people are telling you that there's a huge amount of demand out there for housing, but they're not telling you as what level housing that there's a demand for. And there is a demand out there for housing. This is correct, but it's on the smaller side of the spectrum, not on the larger side of the spectrum. And so we have to consider where's an abundance of supply on larger homes and a shortage of supply on the smaller homes. We're also not telling you about commercial real estate, which is really struggling at the moment as well. There's a lot of reasons why retail investors might end up selling. They simply just cannot afford to continue sustaining their lifestyles the way that they are. Now, debt is at all-time high, and savings are at pretty much all-time lows, right? Most people are living now paycheck to paycheck. These are recipes for disaster, specifically for Bitcoin, when such a significant amount of BTC is held at that retail level. That's my thoughts on it, but let me know what yours are down in the comments below. Let's go ahead and take this on into the exchanges, where we actually see, not that one, we're going to go to this one. We see a fair amount of liquidations, $27.7 million of liquidations on BTC. 7.7 million are with OKX, 67.65% were long, 32.35% were short positions. OKX represents 27.85% of liquidations. Binance represents 23.4%. 𝗕𝗘𝗪 represents 13.35%. Bitget represents 13.56%. Okay, and what we can tell from here is that most of the kind of top level exchanges are usually pretty well spread out or kind of clustered together with large amounts of activity. Unusual activity is usually quite obvious from this particular view when we take a look at this every single day. Now, I would say that 𝗕𝗘𝗪 has climbed up these rankings quite aggressively over the last kind of probably 3 to 4 weeks, which helps us understand that maybe there's some kind of logical rationale behind why liquidations are unusually high for 𝗕𝗘𝗪. So, for example, I would not have expected 𝗕𝗘𝗪 to be above Bitget, yet we see that Bitget's liquidations are lower than that of 𝗕𝗘𝗪 again, right? And this is something that we see quite consistently. And so at 13.56 for Bitget, but 19.35 for 𝗕𝗘𝗪, it makes me wonder what is going on at 𝗕𝗘𝗪. Is there really that much more activity happening on the 𝗕𝗘𝗪 exchange than the Bitget exchange? Let me know what your thoughts are on there. Ultimately, regardless to kind of what we look at here, the the kind of the advice, I guess, even though I can't give you financial advice, I can't do anything like that. I guess what my approach to this is quite simple. We do not keep cryptocurrency assets on the exchanges. We keep them on hardware wallets. I personally like the Ledger device. I've spoken about this quite a few times. I'm not going to go and have another rant about it now. But essentially, there's a link to the Ledger in the description down below should you be looking at trying to get off the exchanges and want a place to store it. Now, when you get a hardware wallet, whether that is Ledger, whether that's Trezor, whatever it may be, the only thing I would say is make sure you get it directly from the manufacturer. Do not go to a third-party site such as, it's hard to say this, but eBay, for example, or Amazon. Ultimately, there are some fake devices out there that are designed to basically drain you of your cryptocurrencies. So make sure that you get these hardware devices directly from the manufacturer. The link in the description below is direct to Ledger and therefore is very safe to use. And of course, if you do use that link in the description, then we do get a small commission from Ledger for the sale, right? And that helps the channel and all that kind of stuff. So just bear that in mind, that if you're going to be getting a hardware wallet, whether that is Ledger or not, just make sure you get it direct from the manufacturer and you verify that the link that you're using to navigate to their website is correct. There's a lot of fake links, there's a lot of fake devices. So make sure that you are using the correct link and the correct manufacturer and all that kind of stuff. So that's step one, right? Make sure you don't keep your cryptocurrencies on the exchanges unless you need to. For example, you're going to need to keep some funding on your futures account. If you're a leverage trader, that's a given. You're going to have to do that, but try to keep it as minimal. Make sure you have proper risk management around all of that. And if you're spot buying and you're just leaving your coins and tokens on the exchanges, you need to stop that and you need to get onto a hardware device and protect yourself. You're opening yourself to unnecessary risk if you keep your crypto on exchanges. And of course, you know, there's many different exchanges out there. So the other thing about this is to make sure that you do register everywhere and you're familiar with how all these platforms works. If you don't have an OKX account, sign up for an OKX account. If you haven't got Binance, sign up to Binance. If you haven't got Bybit, sign up to Bybit. Now, at the moment, Bitget is my go-to platform. I use this for 100% of my leverage trades and 90 to 95% of my spot trades. And, you know, I find it a very easy to use platform, very intuitive. And if there is a link in the description down below for Bitget. And if you do use that link in the description below, you are eligible for up to $8,000 of rewards depending on how much you deposit and trade on the platform. So why not go ahead and check out Bitget, but also check out the other links in the description and in our Discord server. Get yourself registered on as many exchanges as you possibly can. Understand how to deposit fiat, how to withdraw fiat, how to deposit crypto, how to withdraw crypto. How do you transact and trade on the platform? Do you need to link a bank account? Do you need to do KYC? All these things are vitally important because they do set yourself up for the future in a really great way. Ultimately, in a bear market, this is the time to do these things. In a bull market, it can be a little bit too difficult at times to actually sign up to some of these exchanges and through simply just so much demand. Ultimately, make sure you get yourself ready for a good strategy for the bull market. Get yourself registered on all the platforms. And you will really be, future self will be thanking you ultimately. Let's go ahead and take a look at the trade side of things, okay? Because I do see there's some trade opportunities in here, right? So just taking a look at BTC here on the 1 hour time frame. Again, this is Bitget. I think we have an opportunity to short the market here, okay? So we could potentially take a market entry here and we'll put our stop loss above our swing high, which is now above the 200 EMA. So this is going to hold out quite well, I think, and we can target out down here at the fifth wave low point. This gives us a risk reward ratio of about 1.98, right? So our entry would be 26,059, our stop loss at 27,036, and our take profit at 24,121. This essentially will give us a pretty sizable move in Bitcoin. So it will be a 7.5% move or 7.44% move. We would not need to have many X leverages here. So we would probably go with a 5 to 10X leverage on this trade. It wouldn't be one that we'd have to kind of how do I articulate, like do some degen stuff where you have like a 100x move, because that's just going to increase your risk of liquidation. You want a nice stop loss above that swing high and above that 200 EMA, a good take profit down there on the wave 5. Again, you could even have a trailing stop on this one. It doesn't have to be kind of a straight take profit. You could just move your stop loss aggressively down with the moves. But for the most part, this is kind of how I would approach a trade on Bitcoin at the moment. because I do think that next move is to go down. We are overbought on the 8-4 1 hour stochastics. We have structure here for a fifth wave move to the downside. We broke our trend line with a resistance there. We're currently finding that the 50 EMA is not really acting as keen support. So essentially, yeah, I suspect there might be a small move up higher, liquidate any shorts before dropping, but essentially a drop nonetheless, I think, is required here. I'm going to leave this video right there. And if you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one though, guys, have a fantastic day.